Hello traders, I'm Jim and this is my analysis for the Euro versus United States dollar, in which I'll briefly talk about the fundamental drivers and then discuss my point of view regarding the graphical analysis and the opportunities for the week ahead. If this is your first time here and you would like more videos like this in the future, make sure to hit the subscribe button. Now, the fundamental calendar has important news for us. On Monday, ISM non-manufacturing PMI. Tuesday, we have balance of trade, also for the US dollar. Wednesday, we have for the euro, ECB non-monetary policy meeting. And Thursday, we have for the euro balance of trade. Now, let's see the articles. This first article basically boils down to the fact that the euro is attractive for the investors because of the high expectations and the monetary tightening. So thumbs up for the euro. And for the US dollar, although it had good results in the news, the investors are still skeptical. So if we combine the information, we can reach the conclusion that the euro is appreciating and the dollar is appreciating, but this appreciation is not sustained, so it will just boil out at some time. And we can see this on the chart as this upward move here. So this is the result, and we expect to see this in continuation. Now, I will look at the monthly and weekly charts just to get an idea, the main direction, and then I will look at the daily chart to see the opportunities. So the monthly chart. On the monthly chart, the main bias is bullish because we have this highs over here, and the second high is a higher high, and we have these lows where the second low is a higher low. Now the question is this really a higher low in relation to this low here, or it's only a low in the context of this downward move? Well, to answer that, take a look at this wave here. So what I can see, if I look at the extremes, I can see that this is a false break of the local lows over here. Well, actually, this zone here is phase C of an accumulation area according to the Wyckoff method. But if I just look at the chart and ask myself, what is this? I can clearly say that this is a false break of this zone, and a false break equals a valid confirmation, which happened to cause all this appreciation as a result. And the second part here, I see this strong bullish candle, which is the January candle. So the extremes are relevant for a bullish bias. Now let's look at the wave itself. So the wave itself is made up of strong bullish candles mainly, and only a narrow and short-lived retracement. So these are arguments for the bullish bias. However, there is this level over here, and again, this with this line here may constitute a confluence zone and raise the problem of a resistance. However, if I look at this level, this 1.25, I can see that it mainly served as a support here, here, here. Okay, when price rallied to this level, it gave up, it assumed the support role, not without a fight, but the fact is that this level is more supportive. Okay, only one exception here where it played as a resistance, but if I look carefully, I can see here this is a hammer, whereas here I have a strong bullish candle. So these are my arguments for why this bias on the monthly chart is a bullish one. Now let's switch on the weekly chart. On the weekly chart, also a bullish bias because of this higher lows, these higher highs. We have an upward trend, with a trending state right now. However, if I'm looking closely here, I can see this inside bar pattern. What this inside bar pattern actually is a consolidation. Usually this kind of pattern gives way to continuation, and in the context of which we talk about an appreciation that is preceding this pattern, I see the continuation of this pattern as an appreciation. The bias, the bullish bias, will remain valid as long as price remains above this 1.2288 level, which means that the bulls are in control. As long as price falsely breaks the level, which means that the bears don't have enough power to get under this level, and as long as price exits this inside bar pattern through the height of the mother bar. The bias will be invalidated if price falsely breaks the height of the mother bar and the 1.25 level, or if price retraces to this previous height here, to this 1.21 psychological level, which means that the bears are putting pressure into price, and this is something that the buyers would not like. So I would expect this move over here, if it happens, to cancel, at least for a while, the bullish bias. And also note that the high of the mother bar corresponds to this psychological level 1.25, which is a good profit-taking area. Now let's switch on the daily chart to see the actual opportunities. If I look closely, I can see this inside bar pattern. Now this inside bar pattern can be traded in two ways: as an inside bar pattern or as a Hikaika pattern. I'll talk about this in just a moment. First, as an inside bar, what I would expect. In the aggressive manner, I will be looking for buying opportunities after price gets above the high of the mother bar. I will search for buying opportunities while this candle is still open, thus the aggressiveness of this way of trading. However, there is also a conservative way of approaching this, waiting for this bar, or actually this candle, to close above the high of the mother bar. So this pattern can be traded like so, or in the context of a Hikaika pattern. So let me show you what I mean by that. So this is the Hikaika pattern. Basically, it begins like an inside bar formation, but it evolves differently, meaning that it prints a second bar after the inside bar, a second bar which has a lower high and a lower low. Note that I'm interested only in the high and the low of the candle or the bar. I'm not interested in the body. So again, high and low printed lower than the previous candles, high and low respectively. Then the first, second, or third candle that follows this candle has to close, or at least rise above, the high of this inside bar. And you can see the correspondent here. This fourth bar, which actually gives the signal, is this fourth bar here, which actually is the third bar that follows after this free bar here, which is the signal that the pattern, the inside bar pattern, evolved to a Hikaika pattern. So in this moment, in this context, I'm now looking to buy because this pattern is giving the signal. However, another thing to point out is that we also have an inside bar pattern here, and it could evolve like so. Another bar that makes a low lower than the previous low and a high lower than the previous high, and then the first, second, or third candle that follows this one here will have to close or at least reach the zone above the height of this inside bar, thus triggering the signal that this is a buying opportunity. Now, another thing we should be looking for is the break of this 1.2288 1.2547 with a new leg up and then a retracement for this level to be confirmed as a support. Now, this confirmation here could take the form as an engulfing candle, as a hammer, piercing pattern, or whatever, but this is one possibility. The other possibility is that price makes a new leg up, but then tries to get under the level, but it actually falsely breaks this level and gets again above it and confirms it as a support. Now, remember that the profit-taking area, in this case, I said that the next level is 1.2632. So for these buying opportunities here, I would put this profit target around that level, 10 pips to 20 pips under that level. There still are other opportunities that may occur, and these are a retracement that will make a higher low in comparison to this low here, thus triggering a buying opportunity with a first target here just under the 1.2547 level. And if the situation evolves like I previously said, the second profit target could be that 1.26 and 42 level. Another option is to buy when price actually confirms this 1.2296, which is actually the psychological level 1.23 as support, with the same profit targets. And another option is to see this level being falsely broken and then price getting above it and confirming it as a support. This confirmation here, or the previous one, this can take the form of engulfing patterns like so, piercing patterns like so, and so on and so forth. Selling opportunities may also materialize, and these are selling after price breaks this level 1.23 and confirms it as a resistance with a profit taking area here just above this 1.21 psychological level. A more aggressive way to trade this is to wait for a candle to close under this level with the same profit taking area here. And another possibility is this, when which price gets under the level, then above it again, trying to fake, and then getting again under the level and confirming it as a resistance with the same profit taking area, at least in the first step. Well, that's all. Thanks for watching. If you enjoyed this video, I made another video about the Australian dollar versus United States dollar. Remember to like if you enjoyed the video, subscribe if you want to get more videos like this in the future, and comment to let me know what you think and what you would like to see in future videos. Take care and trade well.